Welcome everybody to this presentation. And as I go through the slides, if you have a question, just put it in the chat box and I'll try and take notice of it while I'm talking and address it at that time. So this just kind of depicts me and some of the people at our office after all the policy changes and new announcements. And you guys have probably been bombarded by different accounting firms and law firms and other announcements throughout the past weeks, but I'm sure there's more to come. So in this presentation, I'm just going to cover off basically cash flow for individuals, cash planning for businesses, and then the importance of cash flow budgeting or doing cash projections. So increasing cash flow for individuals, we've got a few options. So the first thing would be file your personal tax returns. I know they're not due until June 1st is the deadline, but if you do have GST tax credits or refunds, it's important to get those filed as soon as possible so those aren't interrupted. Increased GST credit and Canada Child Benefit credits. So if you were previously eligible for GST and child tax benefit, there was increased payments on those ones to help out during this crisis. We also have the CERB, which is Canada Emergency Response Benefit. So if you've been off work because of COVID-19, this allows you to either apply online or by phone and get $2,000 a month. So if that's something you're not collecting right now and think you may be eligible, just Google CERB, go to the Canada website, and they'll give you some details on whether you can apply or not. EI benefits, they reduce the waiting time for those, but if they're screening any applications to see if you qualify for CERB first before collecting EI benefits. So decreasing cash outflows for individuals is an option as well. So that includes one, deferral of your personal income tax payments. So even though you have to file your return till by June 1st, 2020, there's no interest or penalties if you pay the balance owing by September 1st, 2020. And any amounts that were owing after March 18th, so that would include the filing of your 2019 personal tax return, and the balance due on that isn't due till September 1st. Also, if you are one that has to make regular quarterly installments, the installments due after March 18th for 2020 installments is not due until September 1st. Doesn't defer anything that was owed prior to. So if you had a balance owing from your 2018 tax return, that still is due and there's no deferral of interest and penalties on that balance. There's also a deferral of Saskatchewan utilities, so waivers may apply automatically. Just check your regular utility statement. So it's waiver of late payment charges for up to 6 months. And you can check the websites of the different utility companies just to follow up, because automatic payments, such as if you're on the regular monthly SaskPower payment, it won't stop unless you instruct them to stop it. So you may have to contact the utility company. Decreasing cash outflows for individuals. There's also deferral of SAS property tax. So it's if you're one that pays once a year, June 30th, that now has been deferred till September 30th. No penalties assessed as long as you pay by September 30th. And if you're on the TIPS payments, you'll have to phone in to get that stopped because they won't, again, automatically do it for you. There's a wage rents subsidies for businesses. So there's the temporary wage subsidy that can be obtained, and that's equal to 10% of eligible payroll. paid during March 18th to June 19th that businesses can claim. Maximum of $13.75 per employee and a max of $25,000 per eligible employer. So if you have multiple companies, each one of your companies can get $25,000 up to a max $25,000 if you're paying eligible employees between March 18th and June 19th. And the amount is taxable and applies to most entities. The key thing is you had to have had an existing payroll account at March 18th. So we have a lot of clients that pay themselves dividends on a regular basis and don't pay payroll, so they may or may not have a payroll account at March 18th. And if you don't have one as of March 18th, you won't be able to claim this subsidy. There's also the Canada Emergency Wage Subsidy, CEWS, I'll refer to it as, and this is that 75% that they're talking about subsidy for wages paid between March 15th to June 6, 2020. That's there's 3 periods within that time frame right now, unless they extend it beyond that. So that's always something that could happen. And again, it's based on wages that you've paid and requires that you suffered a drop in gross revenue. Unlike the previous one that I talked about, the 10%, you didn't have to prove that you had a drop in revenue. With this one you do. And on the next page here is kind of the drop in revenue. So the first period 1, you have to show that your revenue dropped 15% or more. And for April and May, it's a 30%. And the reason they dropped the first period to 15% is just because the crisis happened halfway through the March month. So when you're looking at revenue drop, you're comparing the March 2020 from the 1st to the 31st compared to March 2019 from March 1st to the 31st, or you can do it on the average of January and February 2020 in the calculations to see if you make the drop. And the benefit of this too, if you meet period 1, there's a deeming rule that you automatically are qualified for period 2. So the key here is you got to have that meet those revenue drops. The way the Canada Emergency, the CEWS subsidy is calculated is the greater of A and B. And if you're a non-arm's length employee, so you're the business owner, for instance, or the spouse of a business owner, you are not eligible for A, so then you just look at B. And the key with B is you need to have a baseline remuneration. So baseline remuneration is defined as the average weekly amount paid January 1st to March 15th, excluding any 7-day period where the employee was not remunerated. So, for instance, if I was calculating baseline remuneration and you're closed January, so didn't pay anybody January, you would then take the average of February to March 15th to calculate your baseline remuneration, and you'd skip the ones that were 0. But that's kind of the calculation. We're finding a lot of clients are struggling with these, and as we look at them for our clients, we're making a lot of corrections in the calculations. One of the key other items with the CEWS calculations, if the employee working for you is within the period, so the first period is from March 15th to April 11th, so that's period 1. If within that period there's 14 days or more that they were not remunerated, you laid them off prior to March 29th, for instance, you're not eligible to claim the CEWS, because in essence, the individual employee is able to claim the Canada Emergency Response Benefit, the CERB benefit, that $2,000 a month, so they don't want double up. There's also announced the Canada Emergency Commercial Rent Assistance, which was announced last week. We're still waiting for the official legislation to give many further details on this, but basically it's a forgivable loan of commercial rent to a landlord that would be normally payable by its eligible small business tenants. So the landlord enters an agreement to reduce the rent by at least 75% with the commercial tenant that's eligible. And to be an eligible tenant, they have to be temporarily shut down or experienced a 70% drop in revenue. So I think in the end, most businesses are going to have trouble qualifying under this. One, they have to experience that drop in the shutdown of their business. Two, they've got to have their landlords agree to go under this provision and basically assume 25% of the rent, because you're in essence going to pay 25%. So in summary, the government gives the landlord a 50% forgivable loan, the tenant pays 25%, and the landlord assumes the balance of the rent. So, and it can't be a deferral. Like they've got to, they can't just defer, the other 75% until times get better. It has to be truly a forgiven portion of rent for businesses. So decreasing outflow for businesses. There's also a deferral of corporate income tax payments. No interest again till September 1st, just like on the personal tax side. And again, it's related to March amounts owing after March 18th, 2020, and installments due after March 18th, 2020. There's also a deferral of GST till June 30th. So no interest or penalties if paid by June 30th. And again, it's amounts owing after March 27th. It was brought in a little later, so that's why the different date. And installments due after March 27th. So it doesn't apply to anything that was owing prior to March 27th. Those ones are still due. We've got deferral of Saskatchewan PST that Saskatchewan Finance brought in. So amounts owing for February, which would have been due in March. For February, March, and April are not due until July 31st. So it doesn't apply again to anything owing prior to February. Your March payment for the February PST should have been made. Deferral of loan payments. So contacting your financial institution, you might be able to get mortgages from 1 to 12 months, deferral on payments. Interest continues to accrue, but payable once deferral ends. And then some financial institutions are also offering reduced interest rates on credit cards. So good idea, even if you're managing, to follow up on these possible, reduced interest rates or deferral opportunities, because you're not sure what it's going to be 2 months from now, 3 months from now. So it's best to be a little more proactive instead of waiting until cash crunch time. Again, reducing cash outflows for businesses. There's a deferral of the Saskatchewan property tax, automatic extension of regular payments to June 30th, regular June 30th payment to September 30th, no interest penalties. Again, if you're on the automatic tips, you will have to probably contact them to get those stopped. Actually, I've got one question or comment. Melissa says that she's contacted her landlord and they are not interested in government help at all. And I think that is going to happen quite a bit. But my business is fully shut down right now, so they would qualify. They are asking for 50% rent up front and the rest paid when we open again. This is very hard to do when we have no income coming in. Any suggestion on how to discuss and persuade landlords to take the government help? So I guess the one thing is, is making sure they're well aware of that program that's available. I mean, it was just announced, and there isn't the legislation out there right now, because if the option is you can't pay them at all, they're actually better off if they can work under this program. So it's just more reaching out to them, negotiating with them, and hopefully that they can go through this program and then get 75% of their rent instead of nothing. Deferrals ask utilities, again, check your statements. Deferral up to 6 months, and for auto payments, make sure that you instruct utility companies to defer the payments or stop payments. There's also business credit and loan programs. Application is through your financial institution. So the Canada Emergency Business Account is a $40,000 interest-free loan that certain businesses can get, with the potential that 10,000 of that 40 is forgiven if repaid by December 31st, 2022. So definitely take advantage of that. And again, you have to reach through your financial institution if you can. The qualification here is what the banks will ask for is a copy of your 2019 T4 summary to ensure that your total payroll was between 20,000 and 1.5 million. So again, we have some smaller businesses out there that haven't been doing payroll to themselves, and it's just run by the husband and wife, so they don't have that 20,000 of payroll. And then use of funds must be covering operating costs, but that can include, the normal wages paid to the owner to run the business, or property taxes or interest or whatever. So just making sure when you get that 40 grand in, that it goes to covering those regular expenses, not just as a dividend out to the owner. The Business Development Bank, BDC, also has some other loan options. So just visit the BDC website and possibilities to get an additional loan to help you through these difficult times. Additional programs, I would just talk about, just contact your financial institution, see what options there are, like additional lines of credit. I know our partnership itself increased the line of credit, and there's even options. Maybe you can even reduce interest rates, defer payments, that sort of thing. Farm Credit Canada is offering different applications as well for additional funding, so that might be a place to go as well. So the importance of cash flow budgeting and projections, especially during this time, is often it's the difference between a company that succeeds and one that fails is all about cash management, because cash is critical. Cash is king, I guess, is the saying. Businesses will be taking a lot of debt on during this crisis, and it's important that you have the cash flow projections to provide the comfort that the debt can be repaid in a timely fashion as the business operations return to pre-crisis levels. So we're really not sure, how long that's going to take. Having too little cash flow means unable to deal with unforeseen circumstances, which really is the COVID crisis right now, having to pass on profitable ventures, increasing loans to overcome liquidity issues, and reduce value of your business. So cash flow budgeting projections should be updated or prepared now during this crisis. Important considerations include ensuring that current financing remains viable. Do you need an increase to your credit line? How long and how much? The bank is probably going to want to see some sort of projections to show how you're going to wrap up business, improve cash flow to help pay for this financing. Reconsider variable costs. So, I mean, obviously, with the crisis and travel bans, we've naturally dropped some variable costs right at this moment. A lot less meals out, a lot less gas travel for travel expenses. We're finding that, we can effectively hold meetings with Skype or Zoom, so no need to travel across the country or province to attend in-person meetings. Um, Again, restrictions on discretionary spending like entertainment, so a lot less luncheons with clients and business meetings. Reducing labor, working remotely may have some redundant or obsolete tasks that can be assumed by other staff or procedures. I know I was talking to one lawyer a couple of weeks ago, and they are also working remotely, and they found that working remotely and having to figure out how to do things on their own without relying on some staff that's just outside their door, uh, they've realized how easy those tasks can be handled remotely by themselves, and so maybe rethinking about the number of staff that they need going forward. Voluntary or involuntary unpaid leave or reduction in hours. So is that an option as well, to help save variable costs, especially if you can get under the Canada Emergency Wage Subsidy and get some of those wages covered. If you have kind of that baseline pre-crisis earnings of, let's say, $1,000, and now you're paying them $750 a week instead, trying to drop their hours a bit, and or even just trying to cover some more of your own costs by reducing their wages a bit, that can be covered even 100% by the Canada Emergency Wage Subsidies. So looking at those options, is there an option to reduce our variable costs? Revisit capital investment plans. So maybe that new piece of equipment or property that you're planning on purchase in the near term becomes more of a longer term purchase. What maybe actually you need a piece of equipment now to come up with a new product or something that's in demand right now, like hand sanitizer or something. To create a competitive advantage, especially during the rebound of the economy after things slowly phase back to normal. Considering alternate or new revenue streams at this time. So new markets, USA, overseas, new products. Again, is there something that's needed now that maybe you could make some changes to your business line and provide? New distribution options, especially now. Maybe it's more of a online sales versus an in-store sales, and can we focus on building the online presence that maybe we don't need that in-store presence anymore? Converting fixed to variable costs where possible. So staff working from home, maybe we can reduce rental space and overhead. So even our firm is looking at, we've been expanding to house all our staff in-house, and now we've realized that we can run everything from remotely, and maybe there's some efficiencies or reduction in fixed costs of the rent by reducing our rental space and getting more people to work from home. Looking at third-party warehousing. So if you're renting a warehousing or you have a warehousing property, is there a way to rent warehousing? So if you don't have the sales, you have to reduce your inventory. It's a lot easier to reduce the space you're renting than it is to, leave a building half empty. Maybe contract shipping instead of having your own shipping trucks or your own ways to ship product. Is there some way you just do it based on contract shipping? Because instead of being left with a bunch of truckers that have no product to ship, and then having to deal with those costs. Cash is so critical and has become a key financial consideration right now, especially during this COVID-19 time. So it's critical that we evaluate all aspects of our business and cash flow management in this time. It would be beneficial now and even after our economy gets back to business as usual to continue to monitor cash flow, make sure, the COVID-19 has highlighted those that probably didn't have the extra cash set away, or they were always operating on a really tight line of credit where they were up against the max even before the COVID-19 crisis. And now they're really struggling to meet the cash flow requirements of their business. So this last graph is just kind of a graph depicting our new reality. The great constant in this is of course that we always have coffee to help us out through the days, but it's just kind of a new reality out there. So that's the end of my presentation. I don't know if anybody else has some questions for me out there. I haven't seen any more come across the website at all. I hope it helped. And if you do want to reach out and talk to me about even any of the programs, actually at Vertus Group, we started the Canada Emergency Wage Subsidy, the CEWS task force, which I'm heading up at our office, and finding that anytime I talk to a client or look at their CEWS application, I find a number of errors that need to be addressed. Oh, so someone asked about home-based businesses. So if you're self-employed, a lot of these programs, like the temporary wage subsidy, if you got employees, will help. So the wage subsidy and that sort of thing. If you don't have employees, it gets you out of a lot of things, but I would still look at deferring tax payments, deferring your utilities, deferring loan payments. Talk to your financial institution to see if there's opportunities out there. There are new details about the Canada Emergency I don't know what, I'm not sure if that's CERB or I'm not sure what CESB stands for. If you can tell me, I don't know if it relates to the CERB benefit. If someone could, Jane Lynn, if you can send me some clarification. It seems that help from governments is more for larger developed business. Really, the help that they're trying to focus on is businesses with employees. They're trying to keep money in the hands of employees. So that's why it's focused more on businesses with employees. So the more employees you have, obviously, the more opportunity you have is to get some of these benefits. Yeah, husband and wife run business and don't do payroll, just dividends. And again, no, the way they've written the legislation for the wage subsidy is it's based on wages paid. You can get, if you switch to wages, if you have a payroll account prior to March 18th, you can get the 10% wage subsidy if you switch to wages, but only if you had a payroll account prior to that time, which you may or may not. You'd have to check out. But otherwise, if you've never done wages before, again, it makes it difficult. They did change the Canada Emergency response benefit, that $2,000 a month. They did allow you to take into account when determining that $5,000. Originally, it was $5,000 of employment income or self-employment income that you could get the CERB. that $2,000 a month. And then they did switch and say if you got non-eligible dividends, you would still be eligible for the 2,000 amount CERB. And we were hoping that they would also switch that for the wage subsidy. So nothing has come out yet to say that they would take into account dividends, but there's always hope that they do change it down the road. The Canada Emergency Students Benefits. So that is I think it's $12.50 a month for students when if they've and I haven't got any more legislation or any news on it. Ideally, students coming out, hopefully they could get under the $2,000 a month CERB instead of the emergency students benefits. But if they can't do the CERB, that would be a great fallback for someone. And it does include someone that's graduated from grade 12 and going into university, registered for university. They would also follow under that Canada Emergency Students Benefit. Let's see. I think there's one more question coming, so. Yeah, it's a very difficult time, and right now the key is, I guess, talking to landlords about this new see if you can go under the rent incentive that they're going to have. The details, again, I said, aren't out yet. They're supposed to come out this May sometime, I suspect in the next week or so. Okay. I think that's it, Carly. I'll pass it back to you. Oh, hello.
Great. Well, thanks so much, Laurie, for taking the time to share with us today. I want to also thank everyone that was able to join this webinar. You'll be able to view this webinar on demand by the end of the day today. Our next upcoming webinar is next Wednesday, and the topic is the difference between accounting and bookkeeping, and is presented by Natalie Stiles from Stiles Accounting and Tax Services. Registration is now open on our website. Bye, everyone, and have a great afternoon. Thanks.